Have you ever wondered how a shopping center can transform into a vibrant mixed-use community hub, blending retail with residential, entertainment, and green spaces? Well, you're in for a treat today. Welcome to the Commercial Real Estate Insights Podcast. I'm your host, Steve Hamoen. Let's get right to it. Pacific Retail Capital Partners, along with Lion Living and Silver Peak, have acquired the Lakewood Center in Lakewood, California, a southern suburb of Los Angeles. This 2 million square foot shopping center is home to major retailers like Macy's, Target, Costco, Home Depot, and J.C. Penney, as well as a variety of food and beverage options. The Lakewood Center is not just a shopping destination, it's a landmark of post-war American development, a cornerstone of the Lakewood community, and a symbol of retail's evolution alongside the people it serves. Since its opening in 1950, the Lakewood Center has adapted to cultural, economic, and demographic shifts, emerging as one of the most highly trafficked malls in the country, consistently generating over $1 billion in annual sales. Looking ahead, Pacific Retail Capital Partners and its partners plan to reimagine Lakewood Center through a comprehensive master plan. This plan will transform the property into a walkable destination that blends legacy retail with new residential, wellness, entertainment, and green spaces. The vision for Lakewood Center is to honor its heritage while transforming it into a next-generation mixed-use destination that meets the needs of a thriving, diverse community and continues to anchor regional vitality for decades to come. Pacific Retail Capital Partners' portfolio now totals 24 properties encompassing over 20 million square feet, demonstrating their commitment to creating dynamic and sustainable community spaces. The City of Chicago has tapped 6 developers to construct over 100 market-rate homes on city-owned lots located on the South Side. This initiative is part of a broader program aimed at stimulating the development of smaller residential buildings in areas that have traditionally been neglected in terms of investment. The aim is to address the missing middle housing gap, providing housing options that fall between single-family homes and large apartment complexes. The project is backed by $39 million in funding and represents a significant push to revitalize these communities. By focusing on market-rate homes, the city is looking to attract a diverse range of residents, thereby fostering a more inclusive and economically vibrant neighborhood. This development is in line with similar initiatives seen in other cities across North America, where efforts are being made to fill in the gaps in housing availability that do not cater exclusively to the lower income or luxury sectors. The emphasis is on providing housing that is affordable for middle-income residents, which in turn supports local businesses and contributes to the overall economic health of the area. KPR Centers, a New York-based retail real estate development and investment group, has recently acquired shops at Knollwood, a 451,700 square foot grocery-anchored retail center located in the Minneapolis suburb of St. Louis Park, Minnesota. The center is almost fully leased, with a 99% occupancy rate. It features anchor tenants such as Cub Foods, DSW Shoe Warehouse, Home Goods, Nordstrom Rack, Old Navy, Total Wine & More, TJ Maxx, and Ulta Beauty, alongside approximately 30 other shops and restaurants. Christian Williams, Richard Froelich, and Michael Wilson from CBRE represented both the seller and the buyer in this transaction. This acquisition marks KPR Centers' entry into the Minnesota market and is part of a broader strategy that has seen the company acquire 12 retail centers totaling nearly 3 million square feet for approximately $400 million over the past 18 months. In July 2025, KPR Centers purchased the combined 480,000 square foot Markland Plaza and Markland Mall in Kokomo, Indiana. Late last year, they acquired Eagle Plaza, a nearly 230,000 square foot grocery-anchored neighborhood shopping center in the Philadelphia area. The group also expanded into Colorado with the purchase of University Hills, a 210,000 square foot grocery-anchored center in Denver. Eric Wolf, a partner at KPR Centers, stated that the team's confidence in the retail sector is driven by the demonstrated rebound from a dip 5 years ago, a lack of new shopping center projects, and historically low vacancy levels. The International Council of Shopping Centers reports a national retail vacancy rate of below 5%, indicating strong demand across almost all retail categories. This demand is pushing leasing rates upward, a positive sign for the health of the retail sector. KPR Centers was particularly attracted to the shops at Knollwood due to the affluence and density of the St. Louis Park area, which supports a thriving community just under 10 miles from the Twin Cities. The submarket boasts a daytime population of over 265,000 workers within a 5-mile radius and more than 104,000 residents within a 3-mile radius, with average household incomes nearing $140,000. The center's mix of nationally recognized retailers and favorable demographics provide confidence in its long-term performance. Andrew Frank, Chief Operating Officer of KPR Centers, mentioned that the team plans to implement proven asset management protocols to enhance the value of shops at Knollwood. This includes property improvements and a thoughtful leasing approach to elevate the shopping experience. The center, originally delivered as Knollwood Mall in 1955, has undergone several renovations, including a transformation into an enclosed mall in 1980 and a return to an open-air design in 2015 following a $30 million investment. Today, it attracts nearly 5.5 million customers annually, ranking it among the top 4% in the state for consumer visits. KPR Centers aims to continue its aggressive acquisition strategy, focusing on high-profile core plus and value-add retail shopping center assets in targeted submarkets across the United States. Daniel Katz, a managing partner at KPR Centers, emphasized that they will focus on Midwest markets to scale their portfolio, leveraging their brokerage and retail real estate relationships and access to capital for executing transactions efficiently. A fund linked to the Church of Jesus Christ of Latter-day Saints, known for its strategic investments, has recently acquired a prominent apartment complex in Boca Raton, Florida. The purchase price was a staggering $152 million, reflecting the fund's commitment to diversifying its portfolio and investing in prime real estate. The apartment complex, known for its luxurious offerings, features units that are listed for over $7,000 per month. This high-end pricing underscores the property's appeal to affluent renters seeking upscale living in the desirable Boca Raton area. The acquisition is part of a broader trend of institutional investors targeting high-value residential properties in South Florida. This move by the Mormon Church-linked fund is indicative of a growing interest in South Florida's real estate market, particularly in multifamily developments. The region's strong economic fundamentals, coupled with a steady influx of new residents, continue to attract significant investment from both domestic and international sources. For Canadian investors, particularly those in the Kitchener-Waterloo, London, and Cambridge areas of Ontario, this transaction serves as a reminder of the potential opportunities in cross-border real estate investments. While the Canadian market remains robust, the allure of the U.S. multifamily sector, especially in states like Florida with favorable tax climates and population growth, presents a compelling case for diversification. In the context of tenant leasing, the Boca Raton complex's ability to command such high rental rates highlights the demand for quality living spaces in high-demand markets. This could serve as a model for Canadian developers looking to optimize their leasing strategies in competitive urban centers. In Port St. Lucie's Tradition Community, PEBB Enterprises and Banyan Development are making significant strides in enhancing their shops at Southern Grove project. They're adding a major player to the mix, the home improvement giant, Lowe's. This addition marks a substantial development for the shops at Southern Grove, with construction of the 134,000 square foot Lowe's store already underway. The store is expected to open its doors in 2026, complete with a garden center, addressing a growing demand for home improvement retail in this rapidly expanding area. PEBB Enterprises Vice President of Leasing, Senior Director Jenny Schumann, expressed excitement about bringing Lowe's to the shops at Southern Grove. She highlighted Tradition's impressive growth with plans for over 38,000 new homes in the surrounding area. This new Lowe's, along with other retailers that are currently in negotiation, aims to meet the needs of the burgeoning community. The shops at Southern Grove is strategically located at the intersection of Southwest Becker Road and Southwest Village Parkway, near the heavily trafficked I-95 and Becker Road. In addition to Lowe's, the shops at Southern Grove will feature 6 outparcels, with several national retailers already in contract negotiations for these spaces. There are still opportunities available, with parcel sizes ranging from 0.5 to 1.8 acres. Tradition is fueling Port St. Lucie's growth, with the city expanding by approximately 10,000 people annually. The community's design ensures that shopping and dining are conveniently located, with shops at Southern Grove positioned to capitalize on this growth and meet the demand for retail and dining options. For those interested in leasing opportunities at shops at Southern Grove, they can reach out to Atlantic Retail Principal Matthew Lynch. This project highlights the ongoing growth and investment in Port St. Lucie, driven by the strategic developments of PEBB Enterprises and Banyan Development. PEBB Enterprises, based in Boca Raton, Florida, is a family-owned, full-service private equity real estate investment company with a strong track record in acquiring and developing high-quality neighborhood, regional, and power shopping centers, as well as suburban office buildings. Banyan Development, on the other hand, focuses on commercial development throughout Florida, with investments in retail, industrial, medical office, residential, and multifamily assets across the United States. This collaboration between PEBB Enterprises and Banyan Development is a testament to their commitment to fostering growth and meeting the needs of expanding communities like Port St. Lucie's tradition. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.